Very good afternoon. You're watching the newsroom on ET Now. I'm Ubina Kapasi. Let's take a look at what the markets are up to as we speak. And well, the recovery that we witnessed on Friday's trading session seems to be continuing. We have the Nifty higher by more than 1% at 11,200, and the Sensex is clocking in a good 500 points in trade. Well, let's tell you then what we have lined up on the show and what are the other big movers and shakers in trade. First up in our market Fatafat segment, take a look at ONGC. We don't see the stock rally very often, but it is jumping a good 6%. Possible news could be that the government of India is perhaps mulling a gas price that could be pegged to Asia's LNG benchmark. This is something that is perhaps causing ONGC to rally. We don't see the stock go up too often, but yeah, today it's definitely the cynosure of all eyes. A massive rally being witnessed on this one, on the FNO as well, one of the top gainers. Take a look at NTPC. We have a buy call coming in on this counter, and CLSA is the one that's maintained a buy with the target at 140 rupees. Interestingly, they are raising the ESG score for this stock by 11%, and they believe that investors could consider buying NTPC as it will expand its regulated equity, and they expect the company to surprise on its renewable targets as well. All right, moving on. PVR as well is in focus. It's seen a massive rally come by in the counter. This morning, in fact, interestingly, we had theatre associations, theatres, the multiplex owners hold a conference call, a webinar of sorts, speaking about the need to reopen theatres. But yeah, that's just the news around PVR. And finally, Tata Metaliks as well is in focus. The company has done a fundraising round. Tata Steel has actually exercised its right to convert roughly about 35 lakh equity shares via warrant conversion. The pricing is at 642 rupees. We've seen a massive rally come by in Tata Metaliks, and today as well the counter is gaining. Okay, well, moving on, as the Apex Court has deferred the loan moratorium case hearing to the 5th of October, the centre has assured that they are at an advanced stage of taking a holistic decision on the issue. The centre has also reiterated that the holistic package will cover all sectors, including the stressed banking sector. ET Now's consulting editor Maithili Bhusnurmath helps us understand what could this mean for banks and the economy overall.
Well, this holistic package is something that should have come from the government. In fact, much before the Supreme Court prodding the government to do something, because that is very evident. There are certain sectors, particularly in the services area, which have been more severely affected by the pandemic than other sectors, whether it's tourism, hospitality, telecom. These are sectors, transport, that have been much more seriously affected by the COVID. So this is something that's been a long-standing demand of these sectors, and if economists and almost any keen observer of the economy say that the government needs to come out with a separate sector-wise package. So we have had, in fact, government had a long time. They've already had a committee, an expert committee go into it. The committee headed by Rajiv Mereshi, which is supposed to have submitted its recommendations. So perhaps the government is asking for some more time. 2 more days is what they've sought. Though I really do not understand what 2 more days can do. Perhaps, and this is just surmising, that the RBI's monetary policy statement is due on the 1st of October. So perhaps as part of the developmental aspects, which is part of the statement which is issued by the Reserve Bank of India, maybe we will see some kind of a sector-specific package, and with that perhaps we will get a final hearing and a final ruling from the Supreme Court on October 5th, because the matter has been hanging fire for a very long time, and this kind of uncertainty does not help anybody. But at the end of the day, let's be very clear that whatever package is given, whatever support is given to the borrowers, does not come for free. It comes at the cost of somebody, whether it is the depositors, in the case the banks take the hit, or whether it is the case of taxpayers, whether the government takes a hit. So let us be very clear that there is no free lunch. It is for the government to decide whether the taxpayer's cost that is going to be borne by a taxpayer is worth the benefit that you're going to get in terms of larger kick for the economy from some specialized benefit to these sectors. So hopefully on the 5th of October, and maybe before that on the 1st of October, we will see a package coming from the Reserve Bank of India with the government sanctity, as it were, and we will get closure on this case, which has been hanging fire for a very long time, and it is the unfortunate consequence of the court and the judiciary straying into an area that it should never have strayed into in the first place.
All right, thank you, Maithili, for that. Well, moving on, LVB is currently in the lookout for a new MD and CEO, and the board looks like is seeking RBI's help in securing a CEO. Let's go across to my colleague Priyanka Ayar, who's tracking the story.
Whereas in a statement, Lakshmi Vilas Bank has said that the RBI has approved that the bank will be run by a committee of directors, which is comprised of 3 directors who were approved by the shareholders at the bank's AGM on 25th of September. The bank has said that the committee will exercise discretionary powers of the MD and CEO ad interim till they can appoint a new MD and CEO, which can be approved by the shareholders. And the bank's liquidity position is comfortable as on date. Trying to allay fears, the bank has said that the liquidity coverage ratio is in excess of 250%. It's at around 262% as opposed to the minimum 100% required by RBI. They also continue to enforce cost reduction measures for both direct and indirect costs. The provision coverage ratio of the bank also remains healthy at around 72% as against the 70% requirement under prompt corrective action. And besides existing business, the bank will continue to focus on capital light loans. The employees will continue to give their services as usual. And additionally, the shareholders have approved the increase of authorized share capital to 1,000 crore rupees. So that is something that has also been approved in the AGM as per the bank. And very importantly, the process of amalgamation with Clicks Group will continue. The due diligence has been done on both sides is what the bank has said, and that process will go on. So after the shareholders disapproved the reappointment of 7 directors, including the CEO and also the statutory auditors, this is what is the statement coming in from the bank, that there is a committee of directors that will continue to run the bank as usual.
All right, thank you, Priyanka, for that. Meanwhile, Maharashtra has become the first state in the country to ban the sale of loose cigarettes and BDs. This is done because loose cigarettes were being sold without the packet, and that means that the graphic health warnings that are meant to educate the public about the harms of smoking do not reach the users. Vinny Motiwala has more on this.
Maharashtra has become the first state to ban the sale of loose cigarettes and BDs across the state. Now, this move is specifically come with a view because loose cigarettes normally do not inform the graphic health warning which comes on the cigarette packet. If you go to see, normally cigarette packets do have the warning of, smoking is injurious to health and no smoking signs. So that is something, that warning does not come into this, and that move, to show that, consumers are supposed to be warned all the time, loose cigarettes do not show that. And that is why this move has come into place, to sell, not to sell loose cigarettes without the, or sell any cigarettes without the packets. Now, what is the likely impact? Obviously, this new order may help to, cut down on smoking among the youth and reduce the number of smokers. And also previously it's seen there's a trend that when there's a 10% rise in the tax, that has resulted to a 8% drop in the number of smokers. So that will be very interesting to see how this move actually goes forward. But let's not forget, such a move was even tried before over the years, but it was not very successful. And, overall, there's a lack of incentive for shopkeepers and BD-walas and small shops to actually go through with this plan. There's a lack of manpower as well to monitor and take action. So that will be very difficult, but sentimentally it will be weak for stocks like ITC, Godfrey Phillips and VST Industries. So we're going to keep an eye out on all these stocks and the move and how they finally go through the implementation.
All right, Vinny, thanks a lot for that. Well, moving on, Bharat Forge has gained 69% in the last 6 months. This comes amidst renewed efforts to restructure overseas business and usher in cost rationalization. Avan gets us the story of Bharat Forge, the positive, the challenges and some key numbers. Avan?
Bharat Forge, the stock quoting at about 550, and in fact there have been renewed efforts to restructure their overseas business and usher in cost rationalization. So what's the story on Bharat Forge, the company that is India's largest automotive forging company, part of the $3 billion Kalyani Group conglomerate? Well, in the last 6 months, the stock has gained about 69%. and from its 52-week lows has risen about 115%. The company has spoken about a lot of its efforts to rationalize costs in the annual report, saying that they will be pivoting, creating a larger pie of revenues from a lot of stable businesses like defense and aerospace. These renewed efforts are being made to restructure their overseas business. They've halted their new capex but has sufficient capacity through their investments of over 1,300 crores. They've undertaken a lot of cost reduction exercises and will look at enhancing their sale in the aluminium forgings from 15 to 20% to 50% in the next 5 years. They're also looking at digital platforms, collaborations, as well as launch of new products, AI and a lot of new tech, and have invested in creating a defense technology with a lot of focus on this sector. The growth outlook will continue with meeting consumer demand, ensuring well-being of colleagues, cost control and cost reduction. So that's the 4 C's. They are seeing meaningful demand recovery only by FY22, and the cost optimization will be seen by FY22 onwards. A lot of positives. The Class 8 truck demand is likely to scale back to over 3,000 units by CY22. The defense opportunity is going to be very meaningful in the long run, and the impact of cost cutting as well as digitalization will be more visible from Q2 FY21. While overseas subsidiary could remain a drag, that's a risk. The aerospace segment outlook could be uncertain due to COVID, and the domestic truck market will be unlikely to reach their peak FY18 volume before FY24-25. But nonetheless, that stock has certainly been in focus and has seen a 16.8% return on equity in the last 10 years and a compounded profit growth of 23.5% within the last 10 years.
All right, thank you, Avan, for that. Well, we'll take a very short break right here on the show. When we return, we will be talking about the upcoming RBI meeting, the age to borrowing bit as well. Don't go anywhere. Okay, welcome back. You're watching ET Now. Let's now get you our ET Now Insights Corner. Which are the stocks where analysts are only bullish and none of them have sell or hold ratings for these stocks? Jayesh Khinani is here with this list.
Let's have a look at the list of stocks where there is extreme bullishness as far as the analyst expectation is concerned. Starting off with ICICI Bank, where there are 58 analysts who track the stock and all of them have a buy rating. It also offers a return potential in excess of 35%. Also remember that ICICI Bank has never traded above its target price ever since Jan 2018. Moving on to Bharti Airtel, now this stock has been in limelight over the last 6 months or so. There are 30 analysts and all of them have a buy rating, and it also offers a return potential in excess of 55%. Moving on to Hindalco, where there are 34 analysts who track the stock and all of them have a buy rating, along with the stock offering a return potential in excess of 40%. Lastly, you have Adani Port and SEZ, where there are 27 analysts who track the stock and all of them have a buy rating along with a return potential of about 22%. However, if you have a look at the broader markets as well, there are plenty of stocks that offer a lot of return potential, and the analyst recommendation is also bullish. HG Infra, PNC Infra, along with Capacite Infra, all of them have, all the stocks, all the analysts who are tracking the stock have a buy recommendation with return potential in excess of 40%. And then you have some of the real estate names which feature in this list, like Sobha, Brigade, along with Suntech Realty as well, where the return potential is about 20 to 40% each.
All right, Jayesh, thank you for that. Moving on, the Indian money market will be eyeing for several cues that is this week. The most important of them, or at least among them, is going to be the second half borrowing schedule that is to be announced for the 30th of September. Ruchi Bhatia joins in with the important cues to watch out for.
A whole host of important cues to watch out for Mint Street. The biggest of them all will be the second half borrowing program. The government has already hiked the borrowing program for this year by 54% to about 12 lakh crore rupees. They had borrowed close to 7.68 lakh crore rupees in the first half, and the remaining 4.32 lakh crore rupees will be borrowed by the government in the second half. Important to note that even if the government does not increase their borrowing program in the second half borrowing announcement. There is a possibility that they may do it a little later in December. That's when they will have a clearer picture on where the economy is headed and the kind of support that is needed for sectors such as health as well as infrastructure. So there's a possibility of an increase in the borrowing program as well. That's what the government has already indicated several times. So apart from that, important thing to watch out will be where from here in terms of the 10-year bond deal. The 10-year bond auction was devolved for the fourth time last week, given the fact that the kind of interest that the RBI was expecting was not on par with their expectations. So the bond auction was devolved. So needs to be seen where from here in terms of the 10-year bond yield. And besides that, all eyes will also be on the Monetary Policy Committee meeting. The meeting starts tomorrow. They will be coming out with a decision on the 1st of October. But the government also has to announce the MPC members. So important cues, of course, to keep an eye on.
All right. Well, on that note, thank you, Ruchi, by the way, for that. We'll wrap it up on this episode of The Newsroom. Many thanks for watching.